Hi everyone, and welcome back to this Wealthy Education Technical Analysis video. Today we'll be talking about reversal patterns, and specifically the head and shoulders pattern. So let's take a look at what a head and shoulders pattern is. In a head and shoulders pattern, a stock is in an uptrend, it reaches a high, pulls back, and then reaches a subsequent higher high. And at this point, the uptrend is intact as we're making higher highs and higher lows. The stock then pulls back a second time, attempts to make another high, and is only able to climb as high as the first high in the pattern. So it's now in the process of making a lower high after this second pullback, and then the stock continues to make a lower low when it breaks through the neckline of the pattern. And the neckline is the trough of the first two pullbacks. So what we have going on from a psychological level is that the stock is performing as it should, making a higher high and a higher low, but then that pattern reverses itself and we have the stock making a lower high and then a subsequent lower low. This tells us that the bull trend has come to an end, and the stock will either move into a consolidation pattern or may move into a bearish pattern. The result is that the pattern looks like a head and shoulders, with the shoulders being the two lower highs and the head representing the highest high that the stock makes in the pattern. So when you break down the head and shoulders pattern, as I just said, it's the stock moving from a pattern of higher highs and higher lows to a pattern of lower highs and lower lows. So let's take a look at a head and shoulders pattern on a chart. Let's use a chart of 3M for our head and shoulders pattern. Here we see the stock is trading on a daily basis, and we see the stock making a new high here, continuing its uptrend. The stock then pulls back, rises higher. So this first high is our shoulder, and then we have a head here. The stock pulls back again to this level, attempts to rise, and our second shoulder, it doesn't get quite as high as the first shoulder, and then the stock moves down. Now in this case, the stock breaks the neckline, which is here. So we have our head and shoulders pattern complete, and then the stock rallies again, but it's unable to close above the high reached in the second shoulder. So our trade remains intact. If we're to go short the stock, we want to use the high of the second shoulder as our stop. And with the stock not having a close above this high, we would have maintained our short position, and then we can see the stock falls off, moving from this 80 level down to the 74 level. A perfect head and shoulders pattern is fairly rare in the charts, but as we can see, this pattern holds the psychology of the trade, where we're making higher highs and higher lows, and then the stock reverses to making lower lows and lower highs. And again, we can use that second shoulder as our stop, because that's our resistance level now with the stock. So if we take a short position at the neckline, we can use that second shoulder as a stop for our short position. A reverse head and shoulders is just the opposite. You'll have a stock in a downtrend. It'll make a low, rally back up, make a second lower low, which is the reverse head, rally back up, and then make a third low that matches approximately the price point of the first low, which would then be your second reverse shoulder, and then rally above the upside down neckline. And with that pattern, we would go long the stock or definitely cover our short position if we're short the stock, which has been in a previous downtrend. So that's the head and shoulders pattern in the stock of 3M. Thank you for watching this video on the head and shoulders pattern and the reverse head and shoulders. In our next video, we're going to move on to continuation patterns, and we'll be talking about triangles, flags, and pennant patterns. I look forward to seeing you in the next video. Thank you.